Welcome to Know What You Are Investing podcast, where we decode the world's top companies, what they do, how they grow, why it matters. Today's episode is all about Google and their Q2 2025 earnings recap. Welcome to Know What You Are Investing podcast. We decode the world's top companies. We look at what they do, how they grow, and crucially, why it matters for you. Today, we're diving deep into Alphabet, specifically their second quarter 2025 earnings. Now, I know earnings reports can sometimes feel a bit dry, just numbers on a page, but our mission here is different. We want to get behind those figures, understand the real story. And the big story this quarter, the force driving so much, is artificial intelligence, AI. We're going to explore how AI isn't just, a buzzword for Alphabet, but a tangible thing reshaping their business. Expect strong growth, yes, but also massive investments, strategic bets on the future. We've gone through the official release, the slides, the earnings call transcript, all the source material to really unpack this for you.
And it's fascinating because Alphabet's results, they're not just about Alphabet, are they? They really act as a kind of bellwether for the whole tech sector and maybe even broader economic trends. When a company this big, touching search, cloud, ads, everything, when they report, it tells you a lot. It gives you a real sense of where innovation's heading, what tech is actually getting traction, and how we're all changing how we use digital tools.
Absolutely. It's a crucial snapshot. Okay, let's get right into the headline numbers, the executive summary, if you will. Consolidated revenues hit $96.4 billion. That's up 14% year over year. Just shy of $100 billion in one quarter.
Almost unbelievable numbers, right? And for a company already at that scale, seeing 14% growth, that's impressive momentum. It shows they're finding real expansion, not just tweaking things.
And net income, up 19% to $28.2 billion. Earnings per share, EPS, also strong, up 22% to $2.31.
Solid growth across the board. It really speaks to the underlying strength we mentioned. It's not just one area carrying the load.
Exactly. And the CEO, Sundar Pichai, he really nailed the theme. He said, and this is the quote to remember, AI is positively impacting every part of the business, driving strong momentum.
That feels like the core thesis for this whole quarter, doesn't it? Not just talk, but reality.
It really does. That statement, positively impacting every part, that's the key takeaway. It's not just marketing fluff. The numbers back it up. You saw double-digit growth in search, YouTube ads, Google subscriptions, platforms and devices, and Google Cloud. It's this widespread effect. AI isn't just like a feature bolted on. It seems to be fundamentally changing how these services work and grow. It connects all the dots.
Okay, so let's break down those numbers a bit more. Let's get into the key financials. Google services, that's the big one. Search, YouTube ads, etc. Revenues were up 12% to $82.5 billion.
Yeah.
Still the advertising giant.
The core engine, still performing very strongly.
Then Google Cloud. This is where things get really interesting, I think. Revenue up a massive 32% to $13.6 billion. Wow, 32%. That's accelerating growth, and it's becoming a really substantial part of the business now. The enterprise focus is paying off.
Definitely. And then there's other bets. The moonshots like Waymo revenue was $373 million. But as you'd expect with these long-term projects, they had an operating loss of about $1.2 billion.
Right. That's the nature of those bets. High potential, but requiring significant investment up front. Not expected to be profitable yet.
Now let's talk profitability overall. Total operating income rose 14% to $31.3 billion, and they kept a strong operating margin, 32.4%, which is pretty impressive given everything.
It really is, especially when you consider what else was going on. That margin shows strong revenue, sure, but also a discipline on the cost side. Continued efficiencies, as they put it.
But there was that one big item, right? The legal charge?
Yes, exactly. That strong margin was actually achieved despite a $1.4 billion charge. It was related to settling some legal matters. So the fact that the margin held up so well, even with that hit, really underscores the underlying profitability and efficiency of the core business.
That's a great point. It shows resilience. And connecting back to cloud, you mentioned the revenue growth, but what about the profitability there?
Yes. This is a huge part of the story. Google Cloud's operating income jumped dramatically. It hit $2.8 billion.
Yeah.
Compare that to Q2 last year, 2024, when it was just $1.172 billion.
Wow, more than doubled.
Yeah, more than doubled. And the operating margin for cloud expanded significantly, too, from 11.3% last year to 20.7% this quarter. For a business that's still growing so fast, seeing that kind of margin expansion is, well, it's critical. It shows it's scaling efficiently and becoming a major profit contributor in its own right.
That really changes the narrative around cloud, moving from just a growth story to a profitable growth story.
Hmm.
Okay, what about cash flow and investments? Free cash flow, FCF, came in at $5.3 billion for the quarter.
Right, and $66.7 billion for the trailing 12 months. FCF is, the cash left over after running the business and investing in assets. It's their flexibility money.
But $5.3 billion for the quarter seems a bit lower given the profits. Was there something specific impacting that?
Yes, good catch. It was impacted by two main things this quarter. First, a big sequential jump in capital expenditures CapEx. They spent a lot more in infrastructure. And second, higher cash tax payments. Apparently, their federal tax payments for both Q1 and Q2 hit the books in Q2.
Ah, okay, that makes sense. So timing factor.
Exactly. Timing and significant investment. But even with those outflows, they ended the quarter with a huge cash pile, $95 billion in cash and marketable securities.
Yeah.
So plenty of firepower for whatever they need to do, especially around AI.
Right. That lower FCF this quarter isn't a sign of weakness then. It's more a reflection of them putting serious money to work.
Precisely. Think of it as investing heavily now to build the capacity for future growth, especially AI-driven growth. It's a strategic choice. They see the demand coming, and they're building the foundation for it. It's actually a sign of confidence, even if it dampens the immediate cash flow number.
That's a really important perspective. Okay, let's shift gears to where a lot of that revenue comes from. Search and YouTube. How is AI playing out there? Google search and other related revenues hit over $54.2 billion. Still massive growth.
Double-digit growth, as Pichai highlighted, and he specifically called out the new AI features like AI overviews and AI mode as performing well.
Let's talk about those. AI overviews, these are the summarized answers at the top of search results sometimes.
Exactly, and the scale is incredible. Over 2 billion monthly users are seeing these now, across more than 200 countries, 40 languages.
2 billion users. And are they actually leading to more searching? I thought maybe they'd reduce clicks.
That's the interesting part. Google says AI overviews are driving over 10% more queries globally for the types of searches where they appear, and that number is apparently still growing. It seems it's not just about answering simple questions faster, but enabling people to ask totally new kinds of questions, more complex things.
Like what? Can you give an example?
Well, instead of just typing keywords, maybe you use AI mode, which is more conversational. It has over 100 million monthly users already in the US and India. You could, say, point your phone's camera at something using Google Lens, maybe a specific part on your bike, and ask AI mode, how do I adjust this specific gear? It understands the image and the question together.
Ah, so multimodal search, combining images and text or voice.
Exactly. And they said multimodal search usage is growing strongly, especially with younger users. Using Lens or Circle to search, combined with AI overviews, it's a more intuitive way to interact. They're also rolling out things like deep search for even more complex topics and making responses more personalized.
And it's not just searching for information, right? They mentioned AI helping with tasks.
Right, like the AI-powered calling to local businesses. That's rolling out to all U.S. users. You could ask Google Assistant to, say, check a store's inventory or book a table, and the AI makes the call.
That could be genuinely useful. What about shopping?
Yeah, the virtual try-on for clothing. They have billions of items you can virtually try on. They said early engagement, especially from Gen Z, is really positive. That's also rolling out more broadly soon. It's all about using AI to make interactions smoother, more powerful, and even bridge the gap between online and the real world.
Okay, so AI is clearly changing the user experience in search. How does that translate into making money, into monetization?
Well, that's the crucial link. By enabling these new kinds of questions, as Pichai called them, they're potentially increasing the overall volume of searches, the incremental query growth. And for advertisers, Google's rolling out more AI tools, AI Max and search campaigns, for example. Apparently, it delivers about 14% more conversions for advertisers.
How does it do that?
It uses AI to automatically optimize bids, creatives, targeting, basically handles a lot of the complex campaign management to get better results. And smart bidding exploration helps find those less obvious, maybe higher value queries that a human might miss. The adoption rate is telling too. Over 2 million advertisers are using Google's AI-powered tools for creating ad assets. That's up 50% year over year. Advertisers are jumping on board.
Okay, so AI is boosting ad performance. What about YouTube? Ad revenue is up there too, right?
Yep, up 13% to $9.8 billion. Mostly driven by direct response ads, the ones asking you to click or buy something, followed by brand advertising.
And Shorts, YouTube's TikTok competitor. How's that doing?
Well, in terms of views at least.
Yeah.
Over 200 billion daily views now. And the big news is monetization. Revenue per watch hour on Shorts is apparently reaching parity with traditional YouTube ads. In some countries, it's even exceeding it.
Parity already, that's huge. I remember concerns that shorts wouldn't make as much money.
Exactly. It shows they've cracked the code, likely using AI heavily for recommendations to keep people watching, and maybe for better ad targeting within Shorts. AI is also used for things like auto-dubbing content, which helps creators reach global audiences, benefiting advertisers too. And they're giving creators new AI tools specifically for making shorts.
What about YouTube beyond ads? Subscriptions.
Strong growth there too. Across YouTube TV, YouTube Music, and Premium, they're diversifying revenue streams. They even expanded their Premium Lite, offering a cheaper tier to 15 new countries. It's like a double strategy. Yeah. Monetize with ads or monetize with subscriptions. Give people options.
Makes sense. And YouTube on TVs, connected TVs.
Still dominant.
Yeah.
#1 in streaming watch time in the U.S. for over 2 years now. Hit 12.8% of total TV viewing in June, a record high. And they're even monetizing that effectively. Shopping ads on CTV drove over 1 billion conversions in the last year, often using QR codes people can scan on their screen.
Okay, so AI seems deeply embedded in monetization across search and YouTube. This raises a question for me. As AI gets better at just giving answers, like with AI overviews, how does that impact the traditional ad model based on clicks? Is that sustainable?
That's the million-dollar question, maybe even the trillion-dollar question long term. And it leads into their broader AI strategy. It's not just about tweaking ads on the current model. Pichai talks about their full-stack approach. What does that mean? It means they're building AI from the silicon up. It starts with infrastructure, their global network of AI-optimized data centers, their custom TPU chips alongside GPUs.
TPUs, tensor processing units, their own custom AI chips.
Exactly, optimized specifically for their AI workloads. That's why they say nearly all the big Gen AI startups, the unicorns, use Google Cloud, and major AI research labs use their TPUs. It's a foundational advantage.
Okay, so infrastructure first, then what?
Then comes the research, the models, the tools. They're expanding the Gemini family, Gemini 2.5 now. These are hybrid reasoning models getting top benchmarks. They also debuted smaller, faster models like Slash and Flashlight for specific tasks. And that crazy result using an advanced Gemini model with something called deepting. They basically achieved a gold medal level score on International Math Olympiad problems.
Wait, really? An AI winning a math competition?
Effectively, yes. It's not just about calculation. It's about complex, multi-step logical reasoning. It shows the models are getting much more capable at actual thinking, not just pattern matching. That's a huge leap for handling complex user needs.
Wow. Okay, so cutting-edge models, how much are these things actually being used?
The usage numbers are staggering. They doubled the number of tokens processed monthly since May. It went from 480 trillion to over 980 trillion.
Okay, break down tokens for us simply.
Think of a token as roughly a word, or maybe part of a word, that the AI processes. So processing nearly 1 quadrillion tokens a month. It's like their AI systems are reading and understanding an unimaginable amount of text and data constantly. It shows the sheer scale of AI activity now.
Mind-boggling scale. What about specific AI products? The Gemini app.
Growing fast. Over 450 million monthly active users now. And daily requests grew over 50% just from Q1 to Q2, and it's filtering into Workspace tools too. Over 50 million people used AI meeting notes in Google Meet in June alone.
50 million? That's a lot of automated minutes.
Imagine the productivity gains. And Google Vids, their AI video creation tool in Workspace using their VO3 model, already hit nearly 1 million monthly active users. People are generating tons of short videos with it. Plus, the paid tiers, Google AI Pro and Ultra, are boosting subscription growth. So direct monetization is happening too.
You mentioned earlier this two-surface strategy, Gemini versus search. Can you explain the difference again? Why have both?
Right, it's a key distinction. Think of AI mode in search as being focused on information retrieval, grounded in web results. Gemini models help synthesize that information, make search better. The standalone Gemini app is positioned as more personal, more conversational, more of an assistant. People use it for chats, creative writing, maybe even exploring ideas. Like using Flow, their AI filmmaking tool, 70 million videos generated since May, or turning photos into videos. So Search plus AI is for finding stuff grounded in the web. Gemini app is for more open-ended creation, conversation, and assistance. Different needs, different surfaces.
Okay, that clarifies it. And what about the future? Pichai mentioned agentic experiences coming, AI agents doing tasks for us.
Yeah, he pegged 2026 as the year for broader adoption of those, where AI doesn't just answer questions but takes multi-step actions for you. The challenges now are things like reliability. They still make mistakes. Latency speed. Cost running these complex agents is expensive, and brittleness, they can fail unexpectedly. But they're making rapid progress on making models more efficient and reliable. That's what will unlock those agent capabilities. Internally, they're already using it. Agentic coding journeys for their own engineers, using AI to help write and debug code, driving efficiency.
Eating their own dog food, so to speak. Are they trying to build an ecosystem around this?
Absolutely. They released an open-source agent development kit, over 1 million downloads already, letting others build agents on their tech. And Agent Space, their enterprise platform for chat, search, and agents, already has over 1 million subscriptions booked before it's even fully launched. Big enterprise demand.
What about the competition? The AI talent war we hear so much about. And partnerships.
They acknowledge the talent war is real, but feel their combination of cutting-edge work, massive compute resources, and strong research community helps them attract and keep people. They describe talent acquisition and retention as healthy. On partnerships, they highlighted the OpenAI collaboration, saying they're super excited about having OpenAI use Google Cloud. It emphasizes their open platform approach. And they mentioned PayPal expanding its use of Google Cloud for things like AI recommendations and transaction processing. So the big picture here is this multi-layered full-stack strategy. It seems designed to position them right at the center of the AI revolution, from infrastructure up to consumer apps and enterprise solutions. It feels like a powerful long-term play.
It certainly sounds comprehensive, but let me push back a bit. Is building everything themselves the best approach? Does that create complexity risks? And tying back to our earlier point, it sounds incredibly expensive. Let's talk more about those investments.
It's a valid point about complexity. Managing that full stack is definitely a challenge, but the perceived benefit is control, optimization, and integration across the layers.
Okay, so let's talk cost. They're raising their CapEx outlook for 2025 significantly. From $75 billion up to what?
Up to approximately $85 billion for the full year. And they signaled further increases coming in 2026 as well.
That's a huge increase. $10 billion more this year alone. Where's that money going?
Well, in Q2, CapEx was $22.4 billion. They said about two-thirds of that went into servers, the actual computers doing the AI work. The other third went into data centers, the buildings and infrastructure and networking equipment. So it's heavily weighted towards compute power.
And why the big increase now? What's driving this demand?
It's coming overwhelmingly from Google Cloud customers, especially for AI infrastructure and those generative AI solutions we discussed. The demand signals are really strong. The number of cloud deals over $250 million doubled year over year. They signed as many billion-dollar-plus deals in the first half of 2025 as they did in all of 2024.
Wow, that's serious acceleration.
Yeah, it is. New GCP customer numbers were up almost 28% quarter over quarter. And over 85,000 enterprises are now building with Gemini models on their cloud, driving a 35-fold increase in Gemini usage year over year. The demand is just exploding, and they're racing to build capacity to meet it.
So they're spending massively to keep up. Are they worried they won't keep up?
They did mention expecting a tight demand-supply environment going into 2026, even with the increased spending. That tells you just how intense the demand is. It's outstripping even their accelerated build-out plans. It's a good problem to have, in a way, but it highlights the scale of the AI wave.
Okay, they're spending huge amounts. Are they confident they'll get a good return on all this investment? ROI.
Management expressed strong confidence. They pointed to Google Cloud's high customer satisfaction, low churn rates meaning customers stick around, and the improving efficiency and profitability we talked about earlier. Basically, they believe the capital is being deployed effectively into a high-growth, increasingly profitable business where customers see real value.
But the spending must impact the bottom line somewhere, right? All those servers don't last forever.
Exactly. That's where depreciation comes in. The CapEx increase directly leads to higher depreciation charges on the P&L. Depreciation in Q2 was up 35% year over year to $5 billion. And they warned that the growth rate of depreciation will likely accelerate in Q3. So for you listening, that means these big investments, while crucial for the future, are creating a headwind for reported profits right now due to higher depreciation costs. It's the classic trade-off. Invest for the long term, accept some near-term pressure.
That makes sense. It's a strategic bet on capturing the massive AI and cloud markets. So how did the analysts on the earnings call react to all this? What were their main questions?
Well, as you'd expect, the ROI on at escalating CapEx was a major focus. Analysts really pushed on whether the returns justified the spending levels. Management kept reiterating their confidence, pointing to cloud's value, efficiency gains, and the sheer market opportunity.
What else were they asking about?
Monetization of AI, especially in search, was another hot topic. The concern about AI overviews potentially hurting ad clicks, the CTR issue.
Yeah.
Philip Schindler, the chief business officer, addressed this directly. He basically said they don't obsess over clicks and CPCs anymore.
Oh, what do they focus on then?
He said the goal is driving great outcomes for users and an attractive ROI for advertisers. It's a broader view of value. He did mention paid clicks were up 4% year on year, but cautioned against reading too much into single metrics. And crucially, he stated that monetization from AI overviews is currently approximately the same rate as traditional search results. That provides a baseline for them to build new, maybe non-click-based ad formats in the future.
Okay, so they're saying AI search isn't cannibalizing revenue right now, and it might open doors for new types of ads. That's reassuring for investors, I imagine.
It likely is. Other topics included that $1.4 billion legal settlement, the higher tax payments impacting cash flow, and potential currency fluctuations, FX volatility, which might actually be a slight tailwind in Q3, but it's always unpredictable.
And the outlook for ad revenue, especially later this year.
Yeah, they flagged a couple of headwinds for the second half of 2025. They'll be lapping, meaning comparing against very strong performance from financial services advertisers in 2024, and also lapping the significant ad spending on YouTube related to the U.S. elections in the second half of 2024. So year-over-year comparisons might look tougher later this year because of those factors.
Got it. So the Q&A really focused on the costs of AI, the monetization of AI, and some of these specific financial items.
Exactly. It showed management trying to balance investor concerns about costs with their conviction about the long-term AI opportunity. Their answers emphasized efficiency, discipline, but also this strategic shift towards new value creation through AI, not just optimizing the old models. It's a complex balancing act.
Okay, let's look even further out. Beyond the core financials and AI strategy, what about their longer-term bets, like Waymo, the self-driving car company?
Right, part of other bets. They mentioned increasing resource allocation to Waymo. It's clearly a priority. And the progress is steady. Launched in Atlanta, significantly expanded service areas in Austin, LA, and the Bay Area.
And you mentioned the teen accounts in Phoenix earlier. That seems like a step towards mainstreaming it.
It really does, allowing 14, 17-year-olds to ride signals growing confidence and safety and a push towards broader market acceptance. Underpinning this is that huge milestone. The Waymo driver has now driven over 100 million autonomous miles on public roads. That's invaluable real-world experience. And they're testing in tough cities like New York and Philly now, aiming to eventually offer rides there too. It's slow, steady expansion based on proven AI capability.
What about hardware beyond phones? Pichai mentioned AI glasses. Is Google Glass making a comeback?
Well, maybe not Google Glass exactly, but he did sound more optimistic about glasses as a form factor. He said AI enables experiences that are a dramatic step up from before. This likely means better on-device AI processing, making glasses potentially much more useful for real-time translation, navigation overlays, subtle assistance, things that need low latency.
So AI could finally make smart glasses practical.
That seems to be the hope, moving towards that ambient computing vision. But he was also realistic. He clarified that phones will likely remain the central consumer device for the next 2 to 3 years at least. So don't expect phones to disappear tomorrow. Glasses are still an emerging category with hurdles to overcome.
Okay, so Waymo is scaling. New hardware forms are being explored thanks to AI, but phones remain key for now. It fits the other bets strategy, long-term potential, not immediate profit drivers.
Precisely. It's about investing in foundational technologies that could define future markets. Even if the payoff is years away, it leverages their core AI strengths and new domains. What's fascinating here is just how long-term Alphabet's vision really is.
All right, let's try to wrap this all up. A lot to digest from Alphabet's Q2. The big picture, really strong growth, hitting almost $100 billion in quarterly revenue. And the driving force, undeniably, seems to be AI, transforming search, boosting YouTube, and supercharging cloud growth and monetization.
Yeah, and underpinning all that is the massive strategic increase in CapEx, pouring billions into building the infrastructure needed for this AI future. It's a huge vote of confidence in their own strategy.
That full-stack approach you mentioned, from chips to apps, seems key to their differentiation.
I think so. It gives them that control and optimization ability. Overall, the earnings paint a picture of a company that's not just adapting to the AI shift, but actively leading it, investing aggressively while trying to maintain that crucial operational discipline.
So that leads us to our final thought for you, our listener, something to chew on. As AI moves beyond just answering questions, becomes more agentic, actually doing complex tasks for us, booking things, coding, managing systems, how does that change our relationship with technology? What new opportunities does that create for businesses? But also, what challenges might arise for us as individuals navigating a world where AI is less of a tool and more of an active collaborator or even delegate in our daily lives? How do we stay informed and in control? Lots to think about there. Thanks for listening to Know What You Are Investing podcast. We decode the world's top companies, saying what they do, how they grow, and why it matters. Thanks for listening to Know What You Are Investing podcast, where we decode the world's top companies. What they do, how they grow, why it matters,